Hello everybody and welcome back. Today I want to talk about Mastercard and their capital allocation decisions because I believe Mastercard is a great opportunity at the moment, and I recently bought more Mastercard because I believe this is a very good risk-reward opportunity right now. The valuation has gotten reasonable and the simplicity of the business is very appealing to me. So in this video I will explain what Mastercard does with their cash flows, if this is smart or not, and the kind of returns you can expect. Because we recently learned that Mastercard increased their buyback program. As I'm recording this, it's been a couple of hours. Mastercard just announced a $14 billion buyback program and a new quarterly dividend increase. So is this important? Is this something you have to pay attention to? These kind of questions that maybe Mastercard investors are interested in. This is what we are going to talk about. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I believe investing in quality companies is the formula to generate alpha in this market, to generate a good performance. And me buying Mastercard is showing conviction that I believe Mastercard will generate some good outperformance in the market, especially at current valuations. Now the stock is down and I am increasing the position because I believe compared to the market, this is getting very appealing. Okay, so first of all, the piece of news we learned a few hours ago, Mastercard announced a new buyback program. I see people on the internet cheering up, saying that, yeah, they are timing the market. They are increasing the buybacks when the market is cheap, when the stock is dropping. That's huge. That's incredible. Well, you can tell that Mastercard is not a very well understood company, because for those following Mastercard, you probably know that Mastercard has been increasing their buyback program every year. And if you don't believe me, you can just ask a question on ChatGPT. I'm using Gemini here, and I just said, Gemini, hello, can you help me explain the buyback program from Mastercard and the timing to see if they are increasing their buyback program when the stock is down. And here is the answer. Gemini tells me every time Mastercard increased their buyback program, it was in December. So no. First question, first answer. Mastercard is not timing their buybacks. Mastercard is not suddenly increasing their buyback program because the stock is down. It's just that it's the end of the current buyback program, so they have to reschedule a new one. Every year in December, you have a new announcement of a new buyback program. First question, first answer. So all the people cheering up because of the timing, I'm afraid timing has nothing to do with this announcement. Okay? Every December, this is the case. Second question you want to ask, is this buyback program big? Is this a new $14 billion buyback program? Is it big or is this meaningless? Well, you can compare $14 billion to one, the past, and two, compare it with the market cap. So Gemini is wonderful. And over the past few years, we learned that the amount of buybacks were $12 billion, $11 billion, $9 billion, $8 billion. Every year, it is increasing. So every year, as the business is getting better, generating more free cash flow, the amount of buybacks is increasing, okay? Which is normal. Nothing really wrong here. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Second question you want to ask is $14 billion big compared to the market cap? The market cap of Mastercard is $482 billion. And that's 14. So 14 divided by $482 billion. And you see, this is 2.9%. Roughly 3% of the market cap would be bought back as buybacks. Is this important? Is this big or not? Well, you can check the track record of the company. And let me show you what has been the buyback program over time. In green, here, you see the change in shares. How much buybacks is Mastercard doing? So in 2014, for example, you see they bought back 3.79% of their shares. And then over the years, roughly -2%, -2%, -1%, -2%. So now we are at 2.9%. Nothing extraordinary. We are doing 2%, 2 to 3% buybacks right now. Nothing really changing. And to be honest, I don't expect the buyback yield to increase that much, from 2% to, 6% if the stock becomes cheap. I don't expect this at all because, that's a digression here, but a good way for Mastercard to increase the buyback yield would be to take on more debt. And Mastercard doesn't want a lot of debt. They want to keep a very good grade of credit rating. They want an A+ credit rating, and you will not have this if you have a lot of debt. So Mastercard is not in a hurry. They know they are a leader. They will use the majority of their free cash flows to do buybacks. So here is the situation right now. Another point I want to cover today is what has been the capital allocation decisions of Mastercard over time. And I have created this pattern, this chart for you, so you understand clearly. Okay, now you may be confused because this is a lot. There are a lot of colors here. Don't be confused. That's fine. I will explain everything. So, what do we have here? Let me put this. Let me remove this. This. I remove the green. Perfect. Here is what you have here. This chart is a mess. I know it. But I created some custom metrics on Fiscal AI. By the way, Fiscal AI is the only website I'm using where you can create your own custom metrics. So I wanted to know, are buybacks important for Mastercard? How much of your operating cash flows is Mastercard allocating towards buybacks? Do you use, 50% of your cash flows to do buybacks, or do you use 100% of your cash flows to do buybacks? If you look at many companies, buyback cannibals, Uber cannibals like Fair Isaac, sometimes companies allocate 100% of their operating cash flows toward buybacks. So I would just wanted to share this. Let me do step by step. So I created this metric, the percentage of buybacks compared to the free cash flow. You know what? I can do even better. I can do this with the operating cash flow. Custom metric here. Buyback compared to operating cash flow. Here it is. This is what you have. For the past 20 years, here is the allocation of buybacks compared to the operating cash flow. The way to describe this is lately, for the last 12 months, you have 65%, which means the buybacks represent 65% of the operating cash flows. So 65% of the cash from operations has been used to do buybacks. And you see that this red line has always been above 50%, right? For the past 10, 15 years, Mastercard has always allocated half of their cash flows to buybacks. And you have some fluctuations. In 2014, it was like 98%. So massive buybacks here. And then during COVID, 60%. And it's roughly 60 to 70% of the cash flows that are used to do buybacks. The conclusion is the majority of the cash flows are used to do buybacks. Now you can check something else. You can check the same thing for dividends. Here is the blue line. In blue, you see how much of the operating cash flows were used to do dividends. And you see this is steady, this is small, 15% roughly. Yeah, okay, let's say 15%. So over time, over the past decade, 15% of the operating cash flows were used to do dividends. So now you have 65% plus 15%. That amounts to 80%, right? Overall. And what is the remaining 20%? Well, you can check CapEx. You can check the CapEx plus the intangibles. You have this, the orange line. In orange, you see how much of the operating cash flows were used to do CapEx, capital expenditures, new reinvestment opportunities. You see this is very minimal. You are at 8%, 9%, 10%, 8%, 7%. Over time, the CapEx has been very minimal. This is also the reason I am investing in Mastercard. Because now, as you have this AI implementation into this world, you can either invest in tech companies with growing CapEx, with a lot of data center development in the future, or you can invest in companies with minimal CapEx, with minimal costs. And I believe inflation is here to stay, so I want my portfolio to be filled with companies with minimal CapEx, minimal costs. Mastercard is a very good example. Over time, this orange line has been very low, less than 10%, minimal CapEx, okay? So now you have what, 80% plus roughly 10%, that's 90%. So here is, roughly speaking, how Mastercard has allocated their cash flows. The majority has been buybacks. The last element I would say is the acquisition process, the M&A. You can check this. I will not use a line because they are not doing acquisitions every year, but you will get my point. Okay, fair enough. This is the amount. How can I show you? No. This would be a good representation of how the company has allocated the cash. In purple here, that's the M&A outflows when they are doing acquisitions. You see, you don't have purple segments, purple charts every year. So what it means is Mastercard is not doing acquisitions every year. The latest big acquisition was in 2021 when they acquired a European company for $3 billion. That was announced previously, but anyway, this was the cash outflow. And since then, no meaningful acquisition. So now you get it. This chart looks a little bit messy, but it helps you understand what has been the capital allocation decisions for Mastercard. Look at the past 10 years since 2015. This is it. What is dominant is the buyback program. After this, you have a little bit of dividends, little capex, and some M&A opportunities here and there. But the big part is buyback. Okay, so now that you know this, now that you know that buybacks are the most important part of their capital allocation framework, what can you do with this information? Well, you can put this in a DCF. Let me go to Stock Unlock. Let me use the DCF from Stock Unlock and you will understand my point. Because now you know the buybacks will continue to be at 2 or 3% per year. So on a DCF, if you want to calculate the intrinsic value of the business, you know that they will continue to make minus 2%. 2% buybacks, 3% buybacks. And at the same time, maybe you want to forecast the free cash flow for this business. What has been the free cash flow growth for the past 10 years? You can check the average, median. You see between 17% and 20%. So you can put 17% here. For the past 10 years, this has been the growth rate for free cash flow. And if these are your estimates, if you think the free cash flow for Mastercard will grow at 17% per year, will continue the same way it has done so in the past 10 years. And if you think they will do 2% buybacks every year, and if you don't touch the dividends, well, if you think the price to free cash flow is 30, is deserved for Mastercard, then the stock is cheap right now, and you can expect a CAGR of 20% per year. What I really like for Mastercard, and this is the reason I am buying more right now, is the consistency of the capital allocation. Over time, the capital allocation has not changed. You have some M&A decisions here and there, but buybacks. Almost zero capex, almost zero costs. Despite their new segment that is growing, minimal capex. The dividends are okay, and the majority of the cash flows are going towards buybacks. So I like what I see. I like what I see, and I think now Mastercard is fairly valued. Maybe not cheap, but fairly valued and a very good risk-reward opportunity. I hope this video was helpful to you to really understand how to think about capital allocation decisions. I see you tomorrow. Bye-bye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.